everything going. So, just want to say welcome back, everybody, to the channel. Haven't really had a chance to actually look at the charts, on my own time. Because most of the time I'm just studying on my own, not really putting effort into trying to help other people, but I think I would like to make time or incorporate time into my schedule to actually analyze these things, because I know a lot of other students that use ICT concepts are actually finding a lot of success, probably from the help of others and just in general. Like when other people help other people, learning is not so hard, especially when people are nice about it. So I'm gonna mark up a couple of things here. So really trying to make this quick. It's 10:44 p.m. where I'm at. Let's try to get this done in like 15 minutes. Hopefully not 30, but I know how I am at to go on and on, because I could talk about this for hours. So all these lines and all this jibber jabber, just kind of ignore that part. If you're newer and you don't understand price action on a level that some people do, just go to ICT's YouTube channel. He'll be able to explain it better. And then just start from the beginning, because it's just not worth coming in here and just being like, oh, what's this? What's all this jibber jabber? Like, this guy doesn't know what he's talking about because he's got 20 things going on. So, draw on liquidity. It's most important. It's the first thing I want to get out of the way. So, bid buy side. See if I have this changed. I've come up with so many things. It's just easier to type them. It's not even worth the time to type some of these things because I'm so used to it. But as a new student, what's funny is I can't believe I'm saying it. He's always saying, like, as a new student, you want to have these on your chart because it builds confidence. So I'm putting it on here for you. That way you have that confidence to know that I once was doing this every single day, every single week. Like, I was always on these things. When I was at work in my free time, I would just always make sure I was doing this. So, one thing I like to do from a student point of view is, I really like marking out short-term highs. Like, that's my favorite. Because once we get that short-term shift in market structure, it's like you just identify all your highs and then your premium rate. So like right here, fair value gap, and then we have a short-term high right here. Blows right through that. It shifted above this high and this high, so it was like a double shift in market structure, which I don't necessarily think that means anything. I just think that I've come to find out that sometimes that can actually lead to a breakaway gap. Depends on the marketplace, but I think I have the understanding enough that breakaway gaps only form, and I do believe that I may be incorrect, but I think that breakaway, God, I can't talk. Sorry, I'm a mumbler. So breakaway gaps have a tendency to stay open, obviously, because that's why they call them breakaway gap. But how they form, I'm not sure if I fully understand that. I think I get it, but I'm not gonna sit here and say that I know what I'm talking about, because I sure as hell don't when it comes to that. Like, I have to study that more. So, just know that this was once a breakaway gap. You could trust it as that because it shifted above this high. And then it comes back down here to a PD array, which is CE with a wick. So this wick right here. That's something to pay attention to. It's not like, obviously, you're going to think to yourself, this isn't important right now. Why is my screen freezing? I'm having computer issues now, I apologize. Let's check the game box. Yeah, I don't really know why this is doing this, but if you take this wick and you measure 50% of that and you find the middle point, you can see that this candle came down. And then obviously turned around, had another change in the state of delivery. And then we came down here, and then eventually we took out that short-term high. Didn't really take long. A couple of days down close. Not really many down close candles here. Most of them support price. So with the indices, the reason why we fell short here and we kind of pulled on back, in my opinion, if I get this out of the way, this is my opinion. I think that's why we turned here. It's also a PD array too. So we'll take this low. Sorry, my internet's kind of acting up right now. It's kind of slow. So this video might be a bit lengthy, but I'll try to make it work. I'll use my hotspot. I don't know why, it's just not, I just don't have a good internet connection. I've been noticing that for like the past 20 minutes. So, while that's loading, I'll try to go back to my online internet. But what I'm going to do is, I'm going to tell you what I'm thinking. So, we're going to go on a weekly chart, because the data over here shows up better. If it'll load, bear with me. This is the problem. Yep. Might have to how about this? I don't feel like redoing this video, so at this point I would recommend skipping. Just scroll through until I start talking to him, because I'm gonna keep myself quiet. I'm not gonna talk much. I have nothing informational to provide to you right now because my computers are not loading. You can see down at the bottom there's a blue circle that's just going around and around, and I don't think I'm connected to the internet. I don't know what's going on with my internet, to be honest with you, but it's not connecting very well. So, like, I'm trying to be on a weekly chart. Oh, there we go. Okay. For those of you that skip through, well, hopefully you're paying attention right now. So, this right here is what he's taught recently. So, yep, we got our chart down here. That's Charter. Just ignore that. I don't care about Charter. Charter sucks. They take everybody's money away from them. I personally think T-Mobile is going to destroy them. So, right here. So, oh, I got the settings wrong here. Gotta change this back to mini. All right. So, weekly chart. Weekly chart. The crosshairs are not synced together, but I'll try to sync them as best as I can. So you can see here, so look at the dates, and you can see that the asset classes are technically, where is it at? So there's really, this is why I don't like this. Again, like I said, just bear with me, guys. Crosshair. I think I got it. Okay, just watch the crosshairs. This little thing right here. Watch the candlestick high and watch the candlestick low. So, compare the highs. So, S&P higher right here than NASDAQ. So, we have that divergence. And then obviously you have to wait for a shift in market structure. This is not something I'm going to get into, but as you can see, high, and then this high is lower. So you have a lower high and a higher high. Look at NASDAQ. Same exact high taken out by S&P from over here. Same exact day. High, S&P has taken out that high, but the NASDAQ hasn't. So we're kind of just looking at that on a smaller time frame and trying to capitalize on that. And then if you look closely, you get a nice little order block here. Beautiful. We're referring to the wick. That's how I would utilize it. And then you take these candles right here. Change the color of that. Something that sticks out more. Make it a little bit darker. And there you go. So you can see how even though the S&P kind of fell off here, you're expecting that to happen because you're seeing this divergence. So the NASDAQ is falling into a weekly fair value gap, and then as that happens, you're seeing relative strength right here. Not the most cleanest strength, but literally this candle's low was taken out by just a little teeny bit, not by much. But look at the NASDAQ. That low right here on the crosshair, same date. The date is not changed. Just look at the date down below under the screen right here. Right here. Look at that. And then look at the data on the NASDAQ. And then look at the S&P. S&P isn't going lower. It's not by much. But the NASDAQ is trading into a premium and trading higher. So you're using that for your bias. So if you're trading a weekly chart, which I don't have the patience for that, but it can be done. I use a daily chart right now because I'm so busy. But like this same setup, you could be sitting in it right now, and to be honest with you, your drawdown right now would be nothing. Like if you sat through all this, kudos to you, because that's tough. That's not easy. So what I'm taking in my analysis of price is I'm looking for, and this is what I love doing on a computer because you can use all these cool little things. So you got the light bulb tool. So remember, short-term shift in market structure is a short-term high being taken out. That's a change in the state of delivery of price. It's only short-term though. Doesn't mean it's going to break market structure. It just means that we're going to probably run an old high or an old low. In this case, if you're trading the weekly chart, you're anticipating this candle's high being taken out because that's a short-term high. Because if we had a short-term shift in market structure on the weekly chart and we created a fair value gap, we can expect that this short-term high, this one, and possibly up to this one because the NASDAQ has already done that. So it's kind of trying to play catch up. Like it needs to catch up to the leader. Like the leader is leading price higher, and the NASDAQ is notorious for doing that. Very notorious. Like the NASDAQ is literally a market that will take off like a freaking Corvette driving down the street. And then at the same time, the NASDAQ is also an asset class that is the first one to take a dump. And believe me, it will wreck you. Either way. Like if it's going up or down, it'll wreck you. It will obliterate you. So you have to be really careful because this thing is wild. So that's why I trade the S&P sometimes. NASDAQ, I don't know. I get a little nervous around that, but it is what it is. So, anyways, back to it. So we have our short-term shift in market structure, weekly chart, going on almost 15 minutes here. Had a little bit of loading that interfered with it, but we're gonna have to go over it. So that's okay. So ignore a lot of these lines and just pay attention to this box. So this is your weekly fair value gap. Right here. Weekly fair value gap. It's also a buy side, sell side imbalance. So it's lacking sell side. So these candles are coming through offering sell side. I think. Don't quote me on that. I still have not got that down. I apologize. I just know that it's a BISI or a SIBI, and when I read it incorrectly, I know I'm aware of it. I just haven't gotten the acronym down. So I suck on that part. It doesn't mean that I read it wrong. It just means that you, as an inexperienced person, could read it wrong. So I just want to throw that out there. Be mindful of that. But just basically train your mind to think that this fair value gap right here, you're accumulating long positions in here. So it doesn't really matter where you buy. If you want to buy underneath, if you're okay with the risk, then that's on you. So we're going to take this down to a daily chart. We're going to basically eliminate a lot of the risk. So see right here, let me undo that. These are all my annotations for my study. So as you can see, I've been taking notes, and I'm not quite caught up yet, but this weekly fair value gap right here that I'm showing is the same thing I was showing on the weekly chart. So if we're trying to get a good entry on the daily chart, we can always wait for a short-term high to be taken out. So right here, short-term high, no, nope, hasn't been taken out yet. So basically, we're waiting for another opportunity to happen. So this one is not a short-term shift in market structure. You're anticipating it to happen. So when this candle takes out this candle's high right here, so not this one, ignore this one right here. This one's the one you want to pay attention to. So right here, take out a short-term high. This candle is lower, this candle is higher, and this candle is lower. That's a short-term shift in market structure. And on top of that, you can tell that it's changing its state of delivery because there's a gap right here. So we'll take these lines up. If they're useful, ignore the nonsense. Don't pay attention to it. It's not important. Just pay attention to the lines. I can't erase them. I don't want to. So just bear with me. Like all these boxes that I have on here, they're old information. They're not important anymore. Well, they are, but just not something that you need to worry about right now. Just pay attention to what I'm talking about, and you'll be fine. So, ICT actually uploaded a video tonight that does this a lot better. So, feel free to watch that if you know what you're doing. But we have this gap right here between these lines right here. So this candle passes through, but does not actually offer lower prices on this candle. So it left this gap open. And then all these candles are doing is just filling in the gaps. So if you're a daily trader, as soon as this candle opens and closes and it's done for the day, you can buy below that candle's low and you can have your stop, which sounds a little bit too risky, but on a daily chart, your stop would be below this low. Now, narrowing that down to take on less risk, I just take it down to a 4-hour. So this is the part where Fibonacci actually plays a pretty good role. It's really helpful. So the same gap right here. These candles right here. Sorry if you get confused. I remember what I was talking about. So daily balance, hot hand, I'll even take it back, just to help you guys out. I know it's hard to see. I'm in a rush, so that's why I'm struggling. Oops. Low end. So take that daily balance right here, bring it out. Take a second to pause the video and remember those levels. And then I'm going to go back to the 4-hour chart and I'm going to narrow it down. So remember right here, these lines. Scroll them over, help you guys out. So on the 4-hour chart, we're looking for the same thing. Where is that? Whatever. Let's do this. So light bulb back on right there. Short-term shift in market structure. Fair value gap. Right here. 4-hour chart. Accumulate long positions in this gap. So anytime it passes through here, you accumulate. And you take opportunities to accumulate in these order blocks right here. So all these down close candles. I don't really like them because they're not consecutive, but I'm just going to stick with them. So inside of this down close candle, you accumulate long positions. So you quite literally, could take a Fibonacci tool and it repeats every freaking week. No joke. Every week. Quarter level of it. Boom. Where's the drawdown on that? 4/1/12/50. And then your drawdown is literally not even a couple of points. That's nothing. That's easy. And then you just kind of have to sit through all this. You kind of have to wait it out. And then obviously if it would have went below this low right here, down here, you would have been stopped out. And that's great because that tells you you're wrong. That saves you from being wrong. Instead of putting your stop lower and lower and then just losing more money. It's not fun. It's horrible. It doesn't feel good. Now, another way to narrow this down, because you already know what the weekly time frame is going to do. So you're already in this, but you're trying to, you're trying to reduce risk. So you could actually move your stop up after, time has passed by and you're noticing certain PD arrays are being respected and you're comfortable with moving your stop up and not having it so low because the stop right here, or having the stop below this low right here versus having it way down here is a lot more risk. Like you're talking, let's take a risk calculator out. I love TradingView, it does these things. So snap it. We'll just do the math on that. So we'll say we entered here. Then your target. So right here at this candle's low to all the way up here where your entry is at, that's 50 handles. So take 50 times 50. That's a lot of risk. 5 times 5 is 25. And then you add 2 zeros, I think. And you're looking at $2,500 of risk. When you could just put it up here and then narrow that down. But you gotta know what you're doing. You can't just have a stop loss like that and expect it to pan out. Like you really have to know what you're doing. So this candle's low right here. And we'll just say we entered right here because I think that's the 25% level right here that you're seeing. I know it's really hard to see. I know it's confusing. But
ultimately, just look at this line right here that's going all the way across. That says 0.25 right here. So 411275. That's your entry. And your risk is right here. So you're risking 8 handles. And, well, let's see here. So you're risking 8 handles to make bring this up. Right there. That's close enough to where you would enter. Do that. And your stop gets slapped right there. Close enough. Works for me. And then I'm going to finish this video off with just showing you the profit and loss. I'm not using the bar replay tool. I'm just showing you what you can make. And I'm showing you how to actually make that money a lot quicker, just effectively. So, so your higher time frame. Oops. Come on. Maybe. Where'd you go? Back here. I am terrible at this. Most of you probably turned the video off. I know. I wouldn't be surprised. Oh, Jesus. And then you miss out on the amount of money you could make doing this. So, 161 in terms of handles. So, that's the top of this right here. The top of this void right here. That's a good target. Obviously, I expect it to continue through that. And I'm sorry, but if you haven't stuck around right now, you're making a mistake. So I could show you some good money, but I'm not showing it for you to be greedy or anything. I'm just showing you like this is possible. So that blue line right here, that's buy side. That literally is the ultimate target. Like that is the last target I'm going for. So hopefully this loads. But yeah, you're looking at 40, what is it? 438275. So let's go back to the daily, 6 hour, that we can visually see it. That is the top, the very top of that short-term line, that short-term high. So that's 240 handles. So 240 times by 50. Let's take a calculator out. You guys can do the math on this too if you want. I'm going to do the math myself. How much is that worth? 240 times by 50. $12,000 per contract. I think that this will take you a couple months, obviously, pan out. I don't expect that to happen overnight. It's going to take a while, but yeah, I think that a lot of you would probably enjoy that. All you gotta do is place the trade, and then you're good to go. So let's cover. Told you it was gonna be a half hour. Knew it. Never fails. I don't even know how to get this.
Let me get Robinhood up. So, what I knew, sorry, campers. Where's Robinhood at? Come on, come on. Where am I at? I do not like Robinhood. I'm not a fan of it, but it's very easy to work with, very easy to understand, especially with the popularity it's gained in the past. Oh, my password doesn't. Yep. I gotta get my verification code out, so give me a minute. Alright, I'm in. This is the part where I feel free to be transparent with you guys because you can't see my account number. And I can't really expose myself, I guess. So, I'm going to use Robinhood. I'm going to pull it up over here. So, as you can see, when I first started trading, fail. Oh, terrible. Oh, that's so embarrassing. Oh my god, that's so funny. Oh, that's terrible, but it happens to us all. So now that I actually know what I'm doing, this is nothing. I can recover that any day of the week. So, definitely not financial advice. Don't copy my trades. You're making a mistake if you do. But I bought Amazon. I'm up 57%. I'm not gonna go over why I bought it. That's your responsibility. But I'm just trying to show you that I'm taking trades. So just leave it at that. DoorDash. I drive DoorDash, so I believe in the company. I can see the AI behind it, and I think that it's a good investment. Again, don't buy it. Don't trust me. I'm not a financial advisor. T-Mobile to help pay my phone bill, make ends meet. Selling some spreads to get rid of that. Costco. This one expires on January 21st. Hoping to use that to pay for my membership every year. And then, obviously, I don't have a lot of money in here, so I'm not really trading much. I have a Tastyworks account that I'm working on. I just really haven't found a good broker that allows me to sell time, because I like selling time for money, because literally, if you go, I just can't help myself. I want to have fun. So Advanced Auto Parts, that's a good one. I like that one. Let's see here. This is absolutely the worst trading platform you could possibly use compared to TradingView, because they just want you to gamble. They want you to use moving averages and all this nonsense, and it's like, dude, that doesn't help me. I don't even know how to change the candlesticks on here. Oh, right here. Candlesticks. So, 3-month chart. Advanced Auto Parts definitely looks like it needs to change its state of delivery before I would touch it to the upside, but right now I just think that it's kind of just hanging out. I need to see it on a higher time frame chart on TradingView to analyze that, but this is a horrible example. So let me think here. I'm trying to think. Oh, Amazon. Here. I'll show you that. So Amazon is showing that willingness to trade higher. If you look at the chart, based off of everything that I've taught, you can tell. But it's a trending market. It's a very popular company. Very convenient. A lot of people use it. So that's why I'm trading it, because I'm trying to capitalize on people using it. So great stock to own, especially this past year alone. It's definitely taken a beating, but it's finally showing a willingness to trade higher. So I'm definitely going to incorporate long positions. I have a couple, but I'm nowhere near the amount of positions that I am willing to put into Amazon. Like, I would put thousands into Amazon, to be honest with you. So, yeah. Honestly, that's all I got. Other than, I want to show you guys this quick. This might help you out. So if you go to Amazon options, this is why I like Robinhood, because it's so versatile. Like, you can literally sell time like it's a cakewalk. So share price is 115. So right now, I don't know where I expect it to go below. All I know is that if I analyze a chart, I would have an expectation of price. So I personally, God, I just have to look, don't I? Let's go to NASDAQ, Amazon. Let's type it in. Okay, weekly chart, very important. See how we're working our way out of that? So that tells me that either A, we're going to take this short-term high up, and we're going to reach in here, fill in this volume imbalance. We're going to trade up this order block, and then we're going to expand up in here. And it's just like this company is just incredible at what they do. So honestly, I think this thing is going to take off and go to all-time highs. I don't see why not. Definitely in here is a high probability scenario, in my opinion. We'll just have to wait and see. But right now, I'm treating all these candles right here as roadblocks, and I'm hoping that it violates them all and goes right through them, because I don't see why it wouldn't. So take that right here, and I would utilize probably the weekly chart, the bottom of this imbalance right here. So 105. I would come over here, take this off, go down to 105, and you basically just buy a put. So you're betting on higher prices. So go to 105, and you're not going to get anything out of these because they're already depreciated. They have no value. And honestly, I can tell this thing is taken up to the upside, because literally a $100 spread is making you $7. That's pretty easy. It's not hard to make. It's not a lot, but imagine having 10 of those open. That's $70 right there. Easy money, especially if you have $1,000. So instead of leaving it in your bank account, which I'm not saying that I'm recommending that you take it out, but just think about that. June 2nd, $70 richer. I mean, yeah, sounds pretty good. It's not a lot, but it's something. It's free money, in my opinion. I mean, you have to work to deal with it and get through that, but I personally would go higher than that. Like, I would be going for spreads like this, like 20-cent spreads, because I'm confident. I know it's going to go higher. So the higher you raise your spread, you'll buy a put, and you sell one underneath it, I believe. So that's incorrect. You actually buy below and then sell above. So the difference is the spread, and then, like, where is it at? I don't even know what they've been doing. Yeah, I don't care about watch lists. So 10 cents right here, it shows it's actually $10. So you're going to get $10 per contract that you open. So you go to continue, you review the order, Everybody, I remember back in the day, like, yeah, do this, and you'll make bank. It's like, no, you will not. That's not how it works. So, right here, see, you get minimum credit, and that's only if you get a fill. You review the order. That's your collateral, $100 per contract. Simple, easy, not hard to understand. Obviously, it takes practice, but that's one alternative to generate income. And then you can also buy a call. So, or right here, yeah, buy a call. So if you think that, like, obviously I thought it was gonna go above 100, and where it's at right now, it doesn't surprise me. I'm not shocked by that, but I think it's gonna go to 180. So you may, as a gambler that doesn't understand how price action works and the elements of options trading, you may want to go in here and be like, oh, June 2nd, let's buy a 155 call. You are gonna lose it right away. It's not gonna happen. So don't expect that. What you need to be doing is you need to go all the way out. No, that's not gonna happen. You're not gonna see that by this date. This date, nope. More likely, really likely. In my opinion, if it doesn't hit this by this, like, I would have just bailed on it, to be honest with you. But my specific date would probably be October, because that's when volatility hits the fan. I'm already winning my trade. I don't care. I've doubled my money. I've made bank off of it. Like, I have secured a lot of profits. So by the time September and October rolls around, the volatility hits the fan. I don't really care. So my personal preference is to try to stay in October for something like this, because literally this thing increased by 34% in one day. Like, it didn't move much, but it's still like, seriously, that's it? That's all it takes? So that would be something that I would be interested in buying. October 2023 call for 150. Definitely would like that. I think that's a reasonable expectation, but I do not expect price to hit all-time highs by then. I just expect my option to have a lot of value. So, other than that, I think I'm gonna wrap this up. I gotta put a disclaimer underneath it, and then that'll be pretty much it. So, hope you guys found this helpful, and if you have, definitely let me know. Give it a thumbs up. You don't have to subscribe. You don't have to do any of that. I just care that it helped you out, because I don't want people out there getting confused and getting scammed by other people and all that nonsense. So, good luck. Well, I wouldn't say good luck, 'cause luck doesn't exist, but just be safe out there and don't take on too much risk. So, with that being said, enjoy your day and just be safe out there.